Hello dear traders, I'm Anna Kasatkin and you're watching the latest financial calendar on Insta TV. At the end of this week, the following events will come under the spotlight. On Thursday, Germany will deliver its final estimates on the GDP growth rate for the fourth quarter. The consensus forecast calls for an increase of 0.4%. The flash estimate revealed that the German economy expanded by the same 0.4% on a quarterly basis in the last 3 months of 2016. The pace of growth was faster comparing to a rise of 0.1% which was registered in the third quarter. However, the result failed to meet expectations of analysts who predicted an increase of 0.5%. In annual terms, Germany's gross domestic product climbed by 1.2% after jumping by 1.5% in the previous quarter. Economists expected the growth rate to decrease to 1.4%. A fall in export was the main reason behind the economic slowdown in the biggest Eurozone's economy. At the same time, the domestic demand contributed positively to the total result as both the consumer and public spending increased. For the whole 2016, the GDP volume in Germany added 1.8%, which made its economy one of the most fast-growing in the Eurozone. On the same day, the U.S. Department of Energy will unveil its weekly report on crude oil inventories. Economists expect the growth of stockpiles to ease to 3,325,000 barrels. In the previous week, the volume of crude oil reserves in the United States advanced by 9.5 million barrels after rising by 13.8 million for the week before that. The total volume of crude stockpiles is 518 million barrels, which is the highest level on record. This figure is more by 9.6% than the last year's levels. The pace of production is 8.98 million barrels per day, while last year the daily output volume was 9.14 million barrels. A year ago, the output was cut by 0.5 million barrels per day for half a year, but this slack was offset within the following 6 months. However, at that time, market participants were quite sensitive to reports on the U.S. crude inventories, whereas nowadays this data is often ignored. Moreover, prices move opposite to the expected trend sometimes, which proves that hopes for balanced market often outweigh bare facts. On Friday afternoon, Canada will publish the inflation data for January. Forecasts called for a rise of 0.3% on a monthly basis. Last December, Canada's consumer prices grew by 1.5% in annual terms, after rising by 1.2% in November. Analysts expected the inflation rate to accelerate to 1.7%. From the previous month, consumer prices fell by 0.2% versus a slump of 0.4% a month earlier. Economists predicted that the inflation would remain flat. The rise in prices was capped by low cost of auto fuel. At the same time, a rapid fall in the loonies exchange rate makes the import goods more expensive and helps to keep the inflation rate close to the target level. On top of the above-mentioned events, traders will absorb the report on the private capital expenditure from Australia on Thursday. The U.S. Labor Department will reveal information about initial jobless claims. On Friday, Governor of the Reserve Bank of Australia, Philip Lowe, will deliver a speech at the event in Sydney. And the last but not least, reports on the new home sales and consumer sentiment in the United States will be revealed at the end of this week. And this concludes the calendar of the most recent financial events from Insta TV team. See you next week. Bye.